Hello and welcome to the options free video. This is David Starr filling in on this holiday shortened trading day. And it was a pretty muted day here today. In the S&P 500, we stayed entirely within Friday's range. And in fact, entirely within the range of a very small pullback that we had from Friday's high. And look, it looks like we're continuing up at least a little bit further. I am bullish, but I am extremely nervous this market, and I want to walk you through why. So we are up against the 3 ATR Keltner channel here, nearly, although not quite, 3 ATRs above the 21-day exponential moving average here in white. That is action that is not sustainable. You can see back here in mid-June, we pushed actually to above that 3 ATR channel for a couple of days and needed to come back towards that 21-day EMA to recover before we can make the last or the next leg up here from last Monday's low. And of course, now here we are stretched again. It's coming back towards this this 21-day EMA that ends up being a good spot to try and get in for these subsequent pushes to the upside. Right up here is not the greatest spot, even though I think in this immediate leg from last week's low, there's probably a little more in there. But beyond just being stretched, there are a lot of reasons for warning, right? This is the all-issue put-call ratio in here. These bars are the levels each day. This white line is the 21-day, the 10-day simple moving average of that level. And so not only are we putting in some relatively low put-call ratios here and on Friday, showing that everybody is speculating on this market with calls. Nobody is using the very low VIX that we've got to buy protection. That also leaves the market susceptible. If no one's got protection on, then if the market does start to turn, everyone's got to scramble to either take profits or buy protection after we start, and that can push the market further down. But if they start to buy puts ahead of time, again, something they haven't done, that can put a floor under the market. But with no such floor out there, again, we're susceptible. It doesn't mean we head down. It just means that if we start to head down, things could start to snowball. Also telling us that things could start to snowball is this CBOE skew index. This is calculated based on the difference in the price of out-of-the-money puts and out-of-the-money calls. And an elevated skew like we have here, this is the value from Friday. It comes out once a day. Today's value isn't out yet, but it doesn't change a huge amount each day. Look, above this 135 level, and we've got to view the market as susceptible. It's not a great timing indicator, but it does give us an indication that this market is in a perilous spot, or a potentially perilous spot. If it does slip, there's a chance that it could really tumble. So adding to all of this, we've also got the cumulative advanced decline line, or cumulative breadth line, here in blue. The S&P 500 is here in white. You can notice, first of all, we're well above the August highs. We're above the February highs. We're up, printing the highest levels that we've seen since back here in April. And in addition to all of that, right, while we're making higher highs here in price relative to where we were in February, where's the cumulative breadth line? much lower. Now, you've heard this talked about in many ways, right? You've probably seen people talking about the equal weighted S&P 500 compared to the S&P 500 index and how the equal weighted is underperformed. But in terms of looking for warnings, it's this divergence in the cumulative breadth line that ends up being a warning that the market could be in trouble. We saw this occurring back here in late 2021, early 2022, higher high in price, lower high in breadth, and it ended up being a warning of the sell-off that we had last year. We can see the same thing right now, both against the February high and also here with against the August high, higher high in price, lower high in cumulative breadth. Now, if we continue up, and as we do so, the cumulative breadth line is dragged up above where it was in February, above where it was in August, then that would change the picture perhaps. But for now, so long as this remains, we have to take that as a warning. But as I've also said, right, those none of those warnings are timing signals. We've talked about some things that could erase them. And as I've told you, I am still trading this market bullishly. Things like our Voodoo Lines roadmap, where we are trading above the all-important Voodoo Fire line, the most important of the Voodoo lines in the area, right? We got a pullback here in late May into this May 24th low that held support north of that fire line. That said, keep looking upwards. We had a few tests of this next important leg to the upside, 43.51. And that has held, again, pushing us upwards. The next important level to the upside is going to be up here near 45.18, the next snow line up. Support above there would suggest this roadmap was telling us to keep looking higher. But if we fail near 45.18 or without reaching there, fail 43.51, then it could be an indication that this market is out of gas. A longer term indication of more down would come below 40.83. So this is a spot where I want to be, because of those warning signs, I want to pick my spots cautiously. We'll talk a little bit more about how to trade this in the premium video and how to be cautious, but still bullish in a market that's full of warnings. So I hope you found that useful, and I will see you next time I come in and visit for an update. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.